Hello traders, you're welcome to this video. In this video, we are going to be discussing the 21 period moving average strategy. So basically, what it means is that the moving average is going to be using the 21 period. We're going to be setting it to the 21 period. That's basically what it means. So the strategy just involves using the 21 period moving average to determine um, our entries, our exits, and all of that. So now the 21 period moving average is a versatile tool that helps you spot trend reversals. So if you are a fan of trend reversals, if you are a fan of pullbacks, if you are a fan of breakouts, then you are going to find this strategy insightful. Okay, it is effective for day trading. Yeah, it's an effective strategy for day trading. Now we're just going to be looking at a step-by-step process of using the 21 MA strategy. So we're going to be loading the indicator into our chart first. Yeah, so we're going to load it to a chart, and then the next thing is to identify the trend direction. First of all, you want to identify the direction of the trend. Okay, so now in this situation we can see that we have a bullish trend, right? I'm just going to map it out. Yeah, we have a bullish trend, right? In this situation we can see, and then the 21 period, you're going to notice that the 21 period moving average acts as a line that helps you identify the overall trend. So while we can also use trend lines for additional confirmation, the moving average itself serves as dynamic support and resistance levels. So in a bullish trend, you will notice that the moving average, the 21 MA, is going to be serving as a floor. You will notice that price will be bouncing off the 21 MA, which is acting as a support level. Okay, so when the price is consistently above the 21 MA, it indicates a bullish trend, right? For example, now as we see that price is above here consistently, emphasis on consistently. When we have the price consistently trading above the 21 MA, it shows that the asset is in a bullish trend. On the other hand, when the asset is consistently trading below the 21 MA, for example, from here to here, we had a bearish trend. Okay, we had a downtrend. Okay, now we can also use this indicator to spot trend reversals. Yeah, the first thing we did was to identify trend direction. The next thing we are going to be doing is to identify trend reversals. So when the price crosses and stays below the 21 period MA from an uptrend, for example, now we had an uptrend here, right? From this point to this point, we had an uptrend, right? Now, when the price crosses the MA, the 21 MA, it can indicate that the uptrend is coming to an end. Okay, it could indicate a trend reversal. So we can see that for a while the price traded below the 21 MA until it now broke out upwards again. So after the initial breakout, it can indicate a potential bearish reversal. Okay. Conversely, if the price breaks above the 21 MA after a downtrend, it may suggest a bullish reversal, just like what happened here. After a downtrend, we can see that the price broke above and the price rallied for a bit up to this point. So when you have the price crossing above the 21 MA after a bearish trend, it indicates a possible bullish reversal. Now, a key tip to note is that you should wait for a few candles to close. If it is for a sell trend that just ended, you should wait for a few candles to close above the MA. Okay, wait for a few candles to close above the MA before confirming the reversal, in order to dodge or to avoid false signals. So you might want to wait for some bullish candles to form above the MA before you confirm the reversal. Okay, so if you are going to enter a buy, you should have entered right after you have some of these bullish candles form. before you now enter a buy. Okay, then on the other hand, if it was a bullish trend that just came to an end, you should wait for a couple of bearish candles to form. At least two bearish candles should form before you even consider entering a sell. Okay, just to confirm that the reversal is valid, so you don't jump into the trend or jump into the trade and then maybe you see the price reversing almost immediately. And then the next thing is we can use this indicator to catch pullbacks. So pullbacks are basically temporary price retracements that happens even in strong trends. The 21 MA acts as a dynamic support or resistance, as you can see here. It's a support that it was acting as here, and then it was acting as a resistance around here. So in an uptrend, when the price pulls back and touches the 21 MA, as we can see that this was an uptrend, we had an uptrend from here to here. So when the price pulls back around here, we had a pullback, we had another pullback here, we had another pullback here, another pullback here, right? So when the price pulls back and touches the MA, is usually a good time to enter the trade. So if you are trying to ride the trend, if you're trying to open maybe multiple positions still in the bullish trend, then you can enter after each pullback. Okay, so like we have, let's say we enter the first trade around here, and then you had a pullback and it bounced off the MA, you can consider entering another buy trade here, and then we had another pullback and it bounced off the MA, you can consider, but to make sure that you are managing your risk properly. So you can divide your lot sizes into multiple numbers, or it depends on how you want to trade. If you want to open multiple trades, if you want to use stacking methods, or you want to layer up your trades in case of maybe you are targeting that the trend is going to go on for long, but you don't just want to enter in all at once. Part of risk management, you want to like split your lot sizes into bits. It can work also, but just make sure that whatever case you are using, you should not risk more than you can afford to lose. Okay, so now if you are trying to catch pullbacks, basically in a bullish trend, for example, when the price retraces downwards and bounces off the EMA, is a good opportunity to buy. On the other hand, in a bearish trend, when the price pulls back upwards, yeah, and bounces off the EMA, is an opportunity to sell. Okay, so now the next thing to note about the EMA is that it can help identify breakouts. Okay, we can also use that for breakout. Remember that the EMA is serving as its dynamic support and resistance level, right? It's serving as dynamic support and resistance. So you can use it to also identify breakouts. Okay, so when price consolidates around the 21 MA, for example, like we can see that around this place, price was consolidating around the 21 MA. You can see there was a consolidation happening within this zone, yeah, and it continued for a while before we finally saw a breakout happening around here. We finally had a bullish breakout. Okay, so when you have a breakout, okay, the breakout initially occurred around the moving average, but you can also use horizontal support and resistance levels for additional confirmation, because you can see that initially price was just moving sideways, right, and the moving average was just going in a sideways manner for a while until we finally had a breakout upwards, and then the moving average started pointing upwards. Okay, so when you notice that the price has finally started bouncing off the moving average, it indicates a breakout, because initially you can see that it was just moving within the candle, but when the candlesticks begin to bounce off the moving average, then it indicates a breakout. So you have to wait for the breakout to happen, then look for the price to retest the 21 EMA or the 21 MA, whichever MA you are using. So when the price touches the MA, you can see that that is a confirmation of the breakout, because this is the retest that is happening. Remember that after breakouts, most of the times retests do happen. So this was a retest that shows that the breakout is valid. Okay, then once the retest holds, that's a confirmation to enter the trade, right? So after entering the trade, you can consider setting your stop loss below the moving average, You can set your take profit at the nearest resistance level, or you can use the exit signal as when the price drops below the moving average. Okay, now you also want to combine the 21 MA with price action, okay, for better confirmations, right? You might want to watch for key price action patterns like engulfing candles, pin bars, or inside bars forming near the 21 MA. Okay, these patterns combined with the MA offer strong confirmation of a trade setup. So whenever you find a candlestick pattern occurring, let's say in a trend, for example, you are having a trend. This is a trending market, like for example, from here to here, you can see the price was trending upwards, right? So, and then you find a candlestick patterns forming. For example, we had a hammer around here, right? We had a bullish candlestick pattern from around here. This one serves as extra confirmation. You can consider entering a buy right after the bullish candlestick pattern formed. Okay, so that serves as additional confirmation for the trade. Okay, now and on the other hand, when it is a sell trend, you might want to look out for bearish candlestick patterns. Anyone that forms at all, you can use that as additional confirmation to enter your sell trade. Okay, now another thing is use of support and resistance zones. Like I already indicated here, support and resistance zones are very important because they can also serve to show you when possible reversal is about to happen, pullbacks, breakouts, and all of that. So it serves as additional confirmation, while the moving average itself is acting as a dynamic support and resistance levels. Yeah, you might want also use horizontal support and resistance levels in addition to the moving average itself. And then you can also use trend lines. Yeah, although trend lines also serve as dynamic support and resistance levels, but the trend lines are more, you know, they don't bend. The trend lines don't bend compared to the moving average. However, the trend lines and the moving average both act as dynamic support and resistance levels, but you can just like add on the trend lines also. But make sure that you use the horizontal support and resistance levels just for additional confirmation. Very important. For example, after we had this breakout occurring here, can you see that price retested this? You can see that price actually retested this horizontal support. It was a resistance initially that now turned into a support. We can see that there was a retest here before the price continued upward. You can see that around here we had a confluence of price bouncing off the MA and bouncing off the trend line at the same time. So having multiple confirmations is important. It helps to increase the accuracy of the signal. Okay, now how do you avoid false signals? One, don't trade based on the moving average cross alone. Okay, don't trade based on that signal alone. Always try to combine the 21 MA with price action and confirm with support and resistance levels just to avoid false signals. Okay, it's very, very important. And then ensure that the breakout or pullback has enough momentum before entering the trade. For example, when you have a breakout, try to wait for at least 2 bullish candles. For example, if it's a bullish breakout, right? Try to wait for at least 2 bullish candles before you enter, and that should be after a retest. For example, we had a retest around here after a breakout happened, right? And then we had 2 bullish candles form. Then we can enter a buy trade right after that. Then we can set a stop loss right below the breakout level, right? And then for a sell trade, you can wait for at least 2 sell candles to form. Okay, it's just additional confirmation. It doesn't mean that the breakout will not be valid. It's just for additional confirmation, right? So try to make sure that you have a momentum. Yeah, when a breakout happens, just try to confirm that there was a strong momentum. You can also consider using other indicators like the stochastics or the MACD, such momentum indicators. You can also use the volume indicator, right, to confirm that there was an increase in volume when the breakout happened, just for additional confirmation, right? So by using this 20 MA strategy as a guide, you can enter trades with better precision, spot trend reversals early, and catch pullbacks without missing out on key moves. Very important. Now, this strategy is an easy to use strategy, okay? An easy to use strategy. All the things that we've discussed so far, I believe that they are easy to understand, okay? So I hope you found this video insightful. Kindly like and subscribe for more trading insights. And in case you have any questions, you can just drop them in the comment section below. Cheers and happy trading.